Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, February the 24th. The year's 2023. Let's talk trading. Weekly wrap up. As always, these videos are for educational purposes only. Your results may differ from mine. And let's jump right into the weekly, and we can see we are down 80 pips off the weekly open, 15 off the weekly low, and 205 off the weekly high. And you look at the dashboard here, all the gaps have filled. Let's go out to the monthly, considering this is the last full trading week of the month. And even that, I guess, could be debated since Monday was a bank holiday. But you can see here for the month, we're 376 pips off of the open, 28 off of the low, and 458 off of the high. And we are definitely in the previous month's lower wick zone. On the daily, we're definitely below the opening range here for the month. For the year, you can see this week we were inside the opening range. We broke out the upside, we broke out the downside 3 times. So anybody shorting around 2034, which was the opening range low for the year, you can see right there, you were rewarded. Speaking about the year, we are 147 pips below the yearly open. We crossed that, I believe, today. Inside bar, we had one 2 days ago. You can see here, call it 2033, 9, 2032, somewhere around there, depending on your broker. You can see we snuck above it and then dropped below it the day before. We dropped below it. You can see here we also had a inside bar on the week 8 weeks ago. There it is right there. And you can see here we broke that. And the reason these things are getting scrunched up, the market's over. Normally I do these videos in the morning, but I did one with Walmart today where we actually had live trading the news. At least we made the video while it was live, the news, and then of course I uploaded it. Unfortunately, I don't have the bandwidth to do those live videos here in the country. It would be choppy, spotty, and just really wouldn't work. Not to mention, to do a video and trade, there's just too much data going across the cellular lines for me to do that very well. Looking at the range, you can see here we had 114 pips on the pound, and we had a bunch of pairs over 100 pips in range. And look at the dollar yen all the way back up to 136. I almost think I should start trading that again. I've missed some major moves on the yen, but then again, keep things simple, focus on one pair, and just do it over and over again. Wash, rinse, repeat. And you can see here something I've been noticing. Been getting a lot of daily open or weekly open trades lately. You can see here today there was a chance to short the weekly open again, just like yesterday there was a few chances, and then it just pushed down. Once again, you had the short zone come in. This is when this is when Walmart and I did it live, and then it just crashed right through. But this daily open during the New York session, I've been noticing this a lot on the pound. It just seems like it's a trade just waiting. Green rats definitely had an opportunity here, but as you can see here, if looking at it, it's making lower highs, lower highs, lower highs. So you just had to take your pips. And the thing is, it was in the launch pad. And I told Walmart today that I think I may have figured out why the launch pad works. because usually price gets, into the 40s, and then it'll run up to the 60. Well, think, what's between 40 and 60? The 50. The 50 psycho line. What's 10 pips above? The 60 line. What's 10 pips below? The 40 line. So people who enter at 50, their stops are probably going to be around 60 and 40. And it was like, wow, it kind of hit me really hard today. It was like, it's and it almost looks like, yeah, that's kind of obvious. So you can see right here with this 50 that, maybe when it hits there, they're just running the stops. I don't know. I guess it's a story we could tell ourselves, but it's just something. Just watch how price reacts around the 50 line. On the pivot trading plan here, Bambino Flex says go short. Price near the pivot, go short. And right there you can see price failed to close above the pivot on H1. And there was just, trading out of that central pivot area between 20 and 32 was definitely a winner. And once again, simple horizontal lines that you can use. The only one that moves is the future pivot point, so you have an idea where the pivot point would be in this case on the next trading day. And so once again, daily open below pivot point, and the bias never even got near R1. But once again, a simple system if you like pivots, and very rewarding. But remember, it's not the method, it's you that makes the difference. And let's see, I guess Cam, the trading nut, had a guy on there recently talking about pivots. You can see here we took out the daily pivot. We took out the weekly. And we took out the monthly. If you come back to the daily, we had 2 missed pivots this month. Here, this one and this one both missed. So it looks like February is going to have 2 missed pivots for a while. And you can see 74 days ago, or 74 trading days ago, we missed out right here. 74 days ago, 345 pips. So that should be interesting in the future to see which one of these two gets taken out. 345 away versus 243. And, next week could take out either one of these pivots. The wick zone, it kept bouncing out of the lower wick zone and finally crashed through it here at 1991. And once again, had an opportunity to take about 49 pips. And the range, 220. A muted week, only at the 25 percentile. So possibly next week, look to see a higher move. Part of that may have been because of the holiday on Monday. We did not break out of the previous high. We did not break out of the previous low. We just put an inside bar up for the week. High minus close, 205. Close minus low, 15. For the rats. For the buy zone traders, 124. Open the high and open the low, 96. Both of those were rewarding. So, as I say, simple horizontal line trading can pay off. And talking about this, the price action simple chart with the Walmart lines, you can see here the ranges died off the last part of the day, but earlier we had the 42, a 37, and a 32. Really, really nice moves here. So right before the news, things were muted. It tried to break out of it broke out of that previous H1 high and then headed south. And there was somebody out there watching some of the old 3LZZ indicators talking about, how can you use it because, it repaints and all that. And I know I addressed that earlier, but there's something else I want to point out about the 3-level ZZ indicator. You see these 3 balls? That's the highest ZZ. Well, I want you to notice something. It put in an upper 3 ball, then it put in a lower 3 ball, then it put in another 3 ball in between, and then another 3 ball in between. Okay, so we've kind of marked outer limits, inner limits. Now, I want you to look at what happens. Now, when you start trading, and we say look to the left. Well, what happened? Price reacted at this zone, right? Came down. So if you took that short, there was an opportunity to pick up, how many pips? 3 or 4 pips. From high 47. No, actually, yeah, from the on this particular candle, it had a low of 45, so 49. So you could have picked up 3 or 4 pips. It came back up here again, reacted and turned around. So once again, now you had an opportunity to go from about 49 to 43. So you could have probably picked up 5 pips. Then what happened? You see here, it put in a 3 ball, and then it started going up. Well, it ran up to that 49 again. So what do? Well, you know what happened the last time, or last 1, 2, 3, 4 times it hit that, it came back down. So you put your short on and it comes down. Then it actually breaks out, but puts in a 2 ball. What's happening? It's coming back down, puts in a lower high right here and comes down. Now you could say, oh, this is hindsight. No, you trade this in the moment. These are painted. Okay, and then it moves down, and where's it come back down? Oh, right near that 3 ball. So once again, what do? You see price starting to move away. You exit out, and you've got another 3, 4, 5 pips of profit. Then it comes up, and then right here, if you took that again, you might have gotten stopped. But think about it. If you took this trade short, because right here, when it hit that line and stopped, what did it do? It went up. Or actually, probably it went down. Then it went up. Then it came back down. Then it came down again and started coming back up. So maybe you could have taken a pip. Maybe you scratched it. Maybe you took a stop. But once again, look to the left. And you see what this says? R3. That's a 3 ball, a resistance level. Put in here, came down. Then all of a sudden it came back up. Now these solid lines means that range or that level wasn't broken. These dashed lines, it means price is going crisscross through it. So what happened with this 3 ball? Really close to this 3 ball. Price reacted downward. So you could have picked up a few pips. Came back up. And what happens? It breaks this R level. Comes up, breaks it to the north. It comes back down. Boom, boom, and look. So what good is the 3-level ZZ indicator? You look at what has happened in the past where it puts these lines in, and then you can start trading off these lines. Some people would call this support resistance. Some people could call this supply demand. Point being, you can make money, but you're not really looking at the 3 ball that it's putting in. You're looking how it's reacting to previous 3 balls. So just remember that. Now, a real quick look here. The ATR for February was 642. And if we look at the actual range by month, we're at 486. So we still have some pips to go possibly. So, fellow traders, that wraps up the week. It snowed here on the coast of Oregon where I live, buried in snow. We had 8 inches of snow at my place yesterday, or this week. So, anyway, I hope you have a fun and safe weekend. And when you come back to trading, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.